Did you think inflation was over and out? Well, I'm going to show you why it is entrenched right now today. It's not going away unless there's some sort of catastrophe that we face. And of course, the news is no short of that type of information. But I'm going to bring you the real scenario of what we are experiencing right now. So many different data points. And then, of course, what you can do about this all, that we can deal with the issue, that we can withstand the crisis. This is possible. People are doing it and they are taking action. And we'll talk about some of that today. My name is David Quinteri, and what I do at this channel is bring you the latest and greatest information, distilling all of the nonsense and jargon to bring you what you need to know. I'm knee deep in the trenches so that you don't have to be. Let's begin by taking a look at inflation. The first thing I want to talk about is something that has been on everybody's mind recently inside the financial industry. They're worried, they're concerned that student loan interest resumes. And what that means for borrowers, of course, they're going to have to start paying this back. Some suggest they won't, but you got to understand, you cannot default on this. Now, borrowers will see their loans return to their previous rates, typically between 3 to 7%. The interest rates on federal student loans are fixed once dispersed, but vary depending on when they are taken out. So they didn't have to do this right here. The statistics I have seen before, although it says $350 here, $390, and I believe it was Barclays who did the study on that. All you need to know is that hundreds of dollars need to be paid every month. People don't have this money ready and able to be just paid out on a monthly basis. It's just not what they have. And so you know that there's 40 million people that are in this circumstance. And of course, some of them are struggling more than others, but you know that it means if $400 is going into this payment, it's not going to shopping, it's not going to vacations, it's not going to that car. I read an article that said you need to make 6 figures a year in order to afford a new car. This is pure absurdity, and this is the kind of thing that does not end well. So this is where people would point to the deflationary scenario, in that something's got to give, something's got to crack, and we do see those points with the banks. But the other side of this equation is, of course, that a crisis is met with inflation, and we only know in time how this will all be. But if you see any of that deflation, you let me know, because I've got my binoculars and that didn't do the job. And then I went into my microscope and started to dig in, and I still couldn't find any deflation anywhere. But if you let me know where it is, please, in the comments below, okay? All right, here we go. You can see buying versus renting in America. My renter friends out there, you're saying, you know, the rent is insane. My friends who own, they're saying the purchase price is insane. It's insane everywhere, okay? It's crazy. Even in these, what you call tertiary cities, the small cities, those ones that maybe they're not particularly desirable, they went up like crazy. But guess what? Everything has gone up. Nothing is reasonable anymore, it seems. I go to the dollar store, I'm paying $5 for products. Yes, they do have something. People say that, oh, all the dollar stores have cheap products. I was there, I was looking through DeWalt products. DeWalt, okay? So it's not necessarily just cheap stuff. Anyway, the point is, when you look at this right here, you can see it for yourself. The rent prices, look at it. Cost to rent, $18.45 a month. Cost to buy, $26.97 a month. You can factor that in so many different ways, but just look at it. Rent prices, yes, they did go up. Absolutely. But look at the cost to buy. That has dramatically risen. Interest rates playing a big role there. But the prices, just take a look at the prices. I still see this today, where we have dramatic increases, where we have areas that are sought after, not necessarily the highest end areas where you would have the wealthiest people, but sought after areas, nice areas, good family areas that are simply so expensive, and they still have inventory shortages. They still have problems because these are generally nice areas. They got the nice schools and everything. This is not something that will be fixed. And if the prices were to come down by, let's say, 30%, that still would make them completely unaffordable. If prices came down by a shocking 50%, which would take a catastrophe in a nice area. Okay, in a nice area. It's still unaffordable. I mean, that's the world we live in. And if those prices came down by 50%, that means job losses are at a very high level. So something is definitely broken. And the fear, my biggest fear, is that we not only, maybe we see a little bit of deflation, maybe we see uncertainty, which is kind of what we're dealing with now, but we go in the other direction. And we go to the point where it is entirely unaffordable for the vast majority of people, inflating to a degree where people take to the streets. That's a big concern. Deflation, nobody should fear deflation. If you're ready and willing and prepared, you can deal with deflation. It's inflation that is uncontrollable. And guess who caused that? Oh, yes, it's your friend Jerome Powell. It's your friend Janet Yellen. These people are responsible. Of course, their institutions are responsible. That's the concern, and that's what we should be aware of. Let me get onto this further. You can see it. It is the mortgage applications to buy a house. Down, 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 of course. But what's happening here is that at the same time as we have all of these problems, no question about it, we're dealing with an issue right now that is, multifold. You've got higher interest rates, you've got low inventories, you've got home builders that are basically saying, we're not going to build under these circumstances right here. And so the problem persists. It's nothing really new, that's for sure. The housing market affordability is worse now than it was during the bubble in 2006. So you know that there are problems that are entrenched and will not be resolved tomorrow. California tech transplants unhappy with exodus to Austin. This is just something that I wanted to show you because a lot of these people, they moved from California, they moved into Texas, New York, moved into Florida and other places. That's not always the solution. And a lot of what the problem is, what they say in the article anyway, is that so much of the talent pool for tech workers is in Silicon Valley. That's where it is. So you can't just move and then say, I'm going to find work over here, because the pool of workers and of course the companies, yes, they've moved offices, but it's just not the same. All right. And that's just a matter of fact. So you can't fix every problem simply by moving. That's just not going to go on. All right. If you are a tech worker, a lot of that needs to be done in Silicon Valley right now. Just keep that in mind. Okay. Wherever, oil industry, I'm going to move to Manhattan for the oil industry. That might not be the place for you, right? Okay. I need to talk about two commodities. That is copper, as they say, Dr. Copper, and oil. If copper is being bought up, it's an indication that things are healthy. And that's why they call it Dr. Copper. Oil is up and could go higher on potential cuts. We're seeing Saudi Arabia that has been cutting recently. At least they've lowered their production. And Russia wants to do the same thing, all right? Rent and housing costs are up dramatically. And so we need to keep that in mind as well. I wanted to point those things out. Let's look into this. Copper is king and oil's a bellwether too. Chief among indicators is copper, highly conductive, known among commodity traders as king copper because its performance historically been an indicator of the entire metals category and for commodities in general. It is also known as Dr. Copper, as though it were a metal with a doctorate in economics because its performance is often predictive of shifts in global, domestic and global economic output. Okay, they talk about this. It is down from its high, but it's up from, then it came down. So it went up like crazy, came down, and now it has risen once again. And so that really spells to potential strength right here in the demand. And that's what we need to see. A lot of demand. Copper is used in basically everything when you're building homes, when you're building buildings, and of course, electric vehicles as well. So these companies are just taking that copper and use many multiples more of copper in an electric vehicle versus a combustion vehicle. And so electric vehicles, they're buying it all up right now. So people are buying into them, and that means more demand for copper. Keep that in mind when we're looking at that. And I also want to touch on oil as well. Very important stuff. Okay. And by the way, the daily fluctuations of this, not something I necessarily pay attention to, but I just think it's important to watch what happens overall. Looking at this with, as we talk about oil, basically just saying while oil and copper are key indicators for the commodity markets overall, following them is of course no substitute for researching specific commodities. And that's right, because you could have a shortage in one area suddenly, you could have demand that certainly spikes, for whatever reason. So always keep an eye on that, like how they are saying, it's just, oh yeah, this is the one indicator. No, I don't agree with that at all. Okay, and oil right now at the time of this recording, WTI being at $85 a barrel, that is something to pay attention to. Getting closer and closer and closer to that $100 a barrel that people were saying, not going to happen. It's inching closer. If there are more cuts, keep an eye out, watch out. So having these at higher levels means higher prices. And that's what I'm trying to get at here. If oil is high, that means transportation costs are high. That means your gasoline prices are high. If copper is high, that means your building materials are higher. That means, all these prices, all of these things come into play. And yeah, if they're too low, then, jobs are hurt. People are hurt by that. But when it's too high, that means you're going to experience more inflation. It's getting tough on all levels. What can you do about it, though? You're going to sit there? Are you gonna say, oh, can't do anything about it? Let me just wait. Let me just wait for a collapse. I'm here waiting for a collapse. No, you got to do what you can today. You've got to take action. I'm hearing from people every single day. They're growing gardens. They're attaining new skills. First things first, you got to get a job in a company that is either resource based or has some connection with emerging industries. That's like, you can't be in an industry that oh, well, you know what, my employer, they're not really valid 2 to 5 years from now. Like you got to be aware of this, and you got to think ahead. You could do that exact same job, but work for a different company. You're in, let's just say, human resources. You're a human resources worker, but what company are you working for? Are you working for that one that simply has no end in sight? Like, you're in a financial company that's likely to get bought out or likely to get demolished, or you're the next Credit Suisse. Do you want to work there? Or do you want to work for a company that has some sort of future? So that's one thing. Now's the time to start looking. Start looking to that. Learn a skill that's desirable in the next 3 to 5 years. Whether we are talking about AI, automation, robotics, these are just some of the obvious ones, but think about that. Okay, it doesn't have to be the latest and greatest thing, but just make sure it's relevant in the near future. Absolutely. And then invest in self-sufficiency, because the future is uncertain. We want to increase certainty, and we do that by becoming more self-sufficient. It's a simple matter of fact, okay? Simple matter of fact. Increase self-sufficiency. You can sleep better at night. Why wouldn't you want to do that? Okay, and that's simple things like if people live in areas where their sun is shining like over 300 days a year, you could be having solar panels. There are others that are, geothermal is the right way to go. There's others that are growing gardens in places. They've got greenhouses and they're making it happen. And they're not making excuses. They're just taking action. And that's what I love to see. Are you an action taker, or do you make excuses? Okay, let me know. What's it going to be? At least you gotta be honest with yourself. This is the place where you got to get on, because we're talking about self-sufficiency every day. We're talking about getting out of debt, getting new jobs. Every single day on the Discord, there are 1,300 people that are on this Discord of like-minded people, and we are positive, and we are helping each other every single day. Check it out at the link in the description below. I want to see you there. Say hi when you come in. Wave your hand. We got all kinds of good stuff in there, okay? Check it out. And of course, the comment of the day, everyone's favorite section. I want to thank Zach Ryan for this comment. David, Russia is set to make an announcement next week. What we believe will happen is the BRICS nations has agreed for more oil cuts. The BRICS have stockpiled oil reserves already, expect higher oil prices, higher inflation, and expect the Fed to raise interest rates. We're going to see what happens. Will they do this? Will Russia cut? Well, that's expected. I've heard of this before as well. Is it going to be widespread? You got Saudi doing it. Okay, does that mean the UAE is going to do it? Does that mean Iran is going to do it? Well, I don't know. But if that happens, if there are cuts, that means prices go up. That means inflation goes up. And that means that puts a further burden on the average person. So do what you can every single day. I want to thank you for that comment. I want to thank you for all of your comments out there. Of course, don't forget to hit thumbs up because it really does support the channel. So click that button on the way out. I want to thank you for doing so. I've got so much more to come. Compass is coming soon. Stay tuned. I'll see you next time.